Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Thursday, September 24th, 2020. And here are our top stories. The impact of the Fed's new inflation rate policy on REITs and crowdfunding real estate may have a very bright future. Well, joining me now to discuss this and more is Deidre Woolard. She is the editor of millionacres.com. Deidre, thanks so much for joining us on the program this morning.
Thank you. It's great to be back.
Always great to talk with you about real estate, home, and commercial. Let's talk about where things stand with commercial real estate. We talked about a month ago. Have things evolved, changed in terms of paying rents, et cetera?
Things are always evolving in commercial, especially right now. One of the things that we're seeing is definitely rent collection is improving on the retail side, which is a really good factor and really encouraging. What's not so encouraging is hotel occupancy is still really low, way below last year, and that's putting a lot of pressure on commercial real estate in the hotel and hospitality sector.
Yeah, that's certainly unfortunate. It has a domino effect to all those people who work in those industries. Deidre, last week, or the weeks all run together, but I believe it was last week, the Federal Reserve Chairman Jay Powell and the Federal Reserve announced a new inflation policy and rates lower for longer and all that kind of good stuff, or not so good stuff, I guess, depending on your point of view. I want to get your thoughts about this. What does this mean for commercial real estate?
It's going to continue to be a good time to invest in commercial real estate, and certainly it's going to be a good time to continue to invest in real estate investment trusts. One of the things that we're watching right now is which of the real estate investment trusts are going to make big acquisition moves, and I think we're going to see a lot of that coming up soon. Some of the bigger office REITs are amassing capital and then getting ready to deploy that capital. Right now, commercial real estate rates haven't come down, but there is the hope that they will do so soon.
And when we're talking about rates, just to kind of, we've had you talking about rates, we've had others. I think we had a gentleman from Calvin Schnorr, who's the economist for NAREIT, National Association of Real Estate Investment Trusts, on several months ago. But REITs really allow, so real estate typically is illiquid, meaning you buy it, you hold it, you buy a house, you buy an apartment. When you buy a REIT, you're actually buying a unit of a portfolio of buildings and apartments, et cetera, right? And so it's a little bit more liquid.
Yeah, it's most REITs are traded on the stock market, so you can buy and sell them just like stocks. They tend to move a little bit differently than like tech stock. Tech stocks, obviously, we've seen in the past few weeks, they can go up and down dramatically. REITs tend to do that a little less. They tend to be a little bit more stable.
So lower for longer, this, the Fed's going to kind of take its boot off the neck of inflation. I don't know where I come up with these metaphors, but it doesn't matter, right? We're going to, they're not as concerned about inflation now. What does this mean longer term for commercial real estate and REITs? I mean, is this a good thing? And should people, at least people out there looking for income, right? REITs generate income like dividends almost. Is this really a good place, and we don't want to provide financial advice, but just some broad education here.
Yeah, so REITs do provide dividends. One of the things that we've seen right now is that some of the REITs have lowered their dividends or suspended them temporarily, but that's always a short-term thing. Some REITs have actually now reinstated their dividend or increased their dividend as they feel more confident, partly because they are getting those rent collections and they are starting to see things get a little bit more promising in a lot of sectors.
Would we expect, as things begin to, it sounds like things are improving, and I don't want to, I don't want to be a Debbie Downer, and I also don't want to be like, totally positive all the time, because we don't know what's going to happen with this crisis day to day. We're waiting on a vaccine. But it seems, based on your analysis and what we're hearing in general, that things are starting to open up, although the hotel sector is not doing as well. Are there specific REIT sectors that people should be focused on? Obviously, hotels may not be one, but I want to get your thoughts on this.
Well, it depends on how much risk you're comfortable with. So hotel REITs are down compared to other REITs, but areas that are doing particularly well would be warehouses. Obviously, we've seen the rise of e-commerce, so we're seeing warehouses, data centers. We're also seeing a lot of interest in housing REITs, multifamily housing as well.
And we've seen companies, I think last time when we chatted, you had mentioned REI, the big outdoor outfit. They create clothing and all different types of experiential things for people who love the outdoors. They were actually selling off their corporate campus. How would something like this impact, I think Microsoft bought it, if I'm not mistaken.
Nope, Facebook.
Facebook bought it. All right. Sorry, didn't mean to. For those haters at Microsoft who are going to write me nasty notes, don't do it. I admit I was wrong. But how does this translate into an impact for REITs, for office buildings, if people who are building campuses now are selling them off?
Well, right now it's fascinating to me because we're really seeing two things. We're seeing a lot of companies move toward work from home. We're seeing companies offer incentives for their employees to move out of major areas. Stripe announced that last week. But we're also seeing other companies saying, we're going back to the office at some point. And what I think is happening is those early productivity gains that people were so excited about when people first started working from home are kind of starting to go away, and people are getting restless. A lot of people want to go back to the office. I've seen several different surveys and studies that show the majority of people are ready to go back to the office. We miss our coworkers. It's just sort of the human condition.
I think we missed our coworkers, and I just miss leaving the house. I mean, I love my wife who's in the next room. We have the studio's here in my condo. I love our cats, but I want to see other people. I want to go out and see you. I want to see Dan Klein. I want to go out and visit my clients. I mean, that's really important. In terms of, last question here, Deidre, real estate is something that is often talked, it's a long-term investment, generally speaking. And it's something that in the retirement industry, because I want to bring it back to retirement here for a second, retirement industry, we're often talking about how do you diversify? How do you allow people in a 401k or a 403b or a 457 plan to diversify? REITs seem to be, or real estate seem to be an area that you would think about adding if you're a long-term investor.
REITs are excellent to hold in IRAs and in retirement profiles, partly because you don't have to, you get those dividends. And that's really important for if you're looking to build an income portfolio, getting those REITs that some of them pay quarterly, some of them pay monthly. Those dividends can really be helpful.
Yeah, absolutely. Well, Deidre, I want to go to a quick break. When we come back, we're going to talk to Deidre about crowdfunding in the real estate industry. It's starting to pick up. It doesn't have a bright future. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive FIBREX composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Deirdre Woolard. She is the editor of millionacres.com. And by the way, that is a real estate website that's part of the Motley Fool family of sites. Deirdre, thanks so much for joining us on the program this morning and staying with us.
My pleasure.
I thought I would, I say Million Acres, and I think a lot of people, I'm sure you get a tremendous amount of traffic, but I wanted to alert people. They can go to millionacres.com and read very thoughtful articles by so many people, including Dan Klein, Mari Backman, and others. So let's talk about crowdfunding and how it comports over to the real estate industry. Deirdre, what can you tell us about this?
So in real estate, there are two ways that you can participate in crowdfunding. If you're an accredited investor, which is a separate investment class where you have to have a certain amount of assets in order to participate, those options are Regulation D crowdfunding, where you're generally investing directly in a project, like commercial real estate, like an office building or a housing complex or something. But there's also Regulation A, and that is really for any investor, and it starts pretty low. You can start investing in real estate crowdfunding for about as low as $500. And what those ones, they work a little bit more like a REIT that we talked about before, where they invest in a variety of different projects, and then you are essentially getting a share of that. The downside for real estate crowdfunding is that unlike a publicly traded REIT, it's not quite as liquid. So you're generally in for a multi-year hold, and it's harder to get your money out. Whereas if you're in a publicly traded REIT, you can put money in, take money out very easily. That's
a very important distinction. Liquidity, very important aspect, especially if you're a retiree who needs access to their capital, or even someone who just wants to move their money around from time to time as their asset allocation changes for different circumstances. But Deirdre, this is really an opportunity. Crowdfunding is an opportunity for people who don't have access to lending. They don't have access to other traditional sources of capital raising strategies. And it kind of levels the playing field in my mind, and it's a way to fund projects because lenders right now are really strenuous, putting on really tough restrictions on people who want to borrow money, even if it's for something that could make money longer term. Well, we've seen crowdfunding essentially get more legitimized in the past few years. So a lot of the bigger developers are now using it, partly because it can be an easy way to get capital. And they also like this idea of going directly to people and giving them the opportunity to invest in these projects. Yeah, and I would imagine that there is some level of transparency. The nice thing about when you buy a REIT or you're buying someone who directly holds real estate, an asset manager, you get some level of transparency. You see the holdings, the tax, the net unrealized appreciation, all those kind of things are baked in to the numbers you see. Do you get that level of transparency in a crowdfunding type of arrangement, real estate crowdfunding arrangement? It really depends on the individual sponsor or developer. One of the reasons that at Million Acres that we created Mogul, which is our premium service that actually vets some of these individual deals, is because it's so important to do your homework. These sponsors will create a large amount of documents, but it can be hard to go through them. You may not know what you're looking for. So it's really important to do your due diligence and understand what you're owning, what the hold period is, what the projected returns are, and what the downsides could be. I mean, we've all seen this year from COVID-19 how quickly things can change. And so you want to make sure that you trust the company that is building the project, and know that they have not just plan A, but plan B, plan C, backup plans, and how those would impact your potential returns. Yeah, it's just not about just the streams of money in or the streams of money out. You really have to get a sense. And I think as someone like myself, and also what you do at the Fool with doing due diligence. A lot of it, you get to know the managers, the management team, what other projects they have worked on in the past. So you get that previous history, those return streams, et cetera. And for the average investor, the regular investor, maybe a little bit more difficult to understand unless you have some business level experience or you have experience in the real estate industry.
It can be, but it's just like when you're looking at a REIT, you're looking at the same types of things. You are looking at the management, the track record, things like that. So once you start to understand what you're looking for, it gets much easier to identify the risks within different projects.
And Deidre, this crowdfunding, I mean, in a way, it's a way to democratize access to real estate, right? I mean, many of us may not have the capital to invest in a commercial building or invest in an apartment, may not have the ability to meet those minimums, Reg D. I think they were Reg D minimums, right? The new, and by the way, the accredited investor rules, I think, just were changed by the SEC to broaden and bring more people in. But still, you may not have access to that. I think that's a good thing, but I think it's probably a balancing act here. Transparency, being able to have access to markets you're not in. And maybe, overall that's a good thing, but some caution is required.
Absolutely. I think one of the things that is interesting about the changes in the accreditation rules is they're focusing a little bit more on education. And because originally the accreditation rules were simply a wealth test. Did you have enough income or enough net worth to invest in these? Now they're adding in whether or not you have a Series 7 license or another type of education that shows that you have investor savvy to understand these investments. And I expect that we'll see more of those types of changes to the rules, and that will really open this up. You talked about democratizing. In the 1960s, REITs came about essentially to give regular investors access to commercial real estate. And crowdfunding in real estate has sort of done the same thing again. And we're going to see this industry evolve the same way that we saw REITs evolve over the decades.
Yeah, it's like anything else. When we talk about cryptocurrency, we talk about alternative investments and private market investments. Access, very important, but also regulation is important too, and transparency. Deidre, always a pleasure chatting with you. I walk away learning so much. I hope our audience does as well. Have a great rest of the week, and we'll talk to you again very soon.
Thank you.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, so much more, all in one place, check out our daily newsletter, The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited, and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.